A very good morning to my dear children. Today in our online class, we shall continue with lesson number 1, which is Introduction to Accounting. And today we will be doing a very important topic, that is relationship between bookkeeping, accounting and accountancy. As you can see in the diagram, bookkeeping is at the center. It is the core of accounting and accountancy. Bookkeeping is a branch of knowledge that tells us how to keep a record of a transaction. In bookkeeping, transactions are recorded in journal, ledger and trial balance. Bookkeeping thus serves the basis of accounting. In accounting, not just the function of bookkeeping is performed, that is recording, but it is a step ahead of bookkeeping. It not only records, but it classifies, summarizes and analyzes the accounting information or the transactions recorded and then communicates it to the various users. Thus, accounting is basically a service entity, whereas accountancy, it is a profession which includes accounting. It is basically the methodology. Now, let us do a detailed difference between bookkeeping and accounting to understand the concept better. The first difference between bookkeeping and accounting is that bookkeeping is the basis of accounting, whereas accounting starts after where bookkeeping ends. Bookkeeping confines itself to record, post and balance preparation of trial balance, whereas in accounting, with the help of trial balance, final accounts of a firm are made. Bookkeeping is done by a junior staff because the nature of work is clerical, whereas accounting is done by senior staff because the nature of work involves skill, imagination and analytical ability. Bookkeeping records transactions in significant and orderly manner, whereas accounting, it classifies, summarizes and communicates information to users. Bookkeeping covers journalizing and extracting of balances, whereas accounting covers preparation of trading account, profit loss account and balance sheet. In bookkeeping, there is no requirement of adjustments and rectifications, whereas in accounting, adjustments and rectification are done in final accounts at the end of the year. Thus, bookkeeping is primary in nature, whereas accounting converts primary data into secondary information. Now, the difference between accounting and accountancy. Accounting is body of knowledge, whereas accountancy is branch of knowledge or discipline. Accounting consists of principle, postulates, assumption, convention, concept and rules, which govern the science of recording, classifying and analyzing financial transactions, whereas accountancy is the practice and the art of science of accounting. Our next heading is users of accounting information. Since you know accounting information, accounting is the language of business. Through this language, necessary information is provided to its users. It tells its users about the profitability and state of affairs of business. Therefore, users of accounting information are divided into internal and external. Internal constitutes the top, middle and lower level executives working in the organization. They require information in selecting out of alternative proposal, planning or budgeting and devising remedial measures. Whereas the external users of accounting information is further classified into the ones who are directly concerned and the ones who are indirectly concerned. The ones who are directly concerned are first creditors. Creditors are those people who give financial help to the company. Therefore, it is important for them to know the stability and earning of the firm. Investors. Investors wish to know whether they should buy more shares, hold their shares, or sell their shares. And they should be sure before investment that the capital will be safe and periodic return will be received from the company to them. Employees. Employees require accounting information to determine their salary and the various benefits provided by the firm to them. For example, retirement, gratuity, etc. Tax authorities. Tax authorities need to calculate tax. Tax is calculated on the basis of information, and since this information is recorded, it becomes convenient for the tax authorities to calculate tax. Consumers. The role of business is not just to provide quality goods at reasonable prices, but it is the duty of business to be socially responsible towards the society, and this is done by proper utilization of scarce natural resource. Last, foreign enterprises. Foreign entrepreneurs want accounting information for export, import, and collaboration with companies of other countries. Indirectly concerned. Regulatory agencies, for example, Company Law Board, Registrar of Company, Ministry of Labour, Ministry of Industries, etc. all require accounting information. Public. Accounting information help public to tell the trend and recent development in the prosperity of the enterprise and its impact on the general public. Researchers require accounting information to undertake research in accounting theory as well as business affairs and practices. Media. Achievement, performance, and problems of companies is highlighted by media to the users. Thank you.